Have you ever watched your trading account bleed red within minutes of entering a position, wondering how you managed to pick the exact worst moment to buy? That sickening feeling when the chart immediately moves against you, as if the market was waiting for your order to reverse direction, is something every trader knows all too well. The truth is, timing isn't just important in trading, it's everything. You can have the perfect stock, the perfect setup, the right fundamental story, but if your timing is off by even a few hours or days, what should have been a massive winner becomes another painful lesson in your trading journal. Here's what most traders don't realize. The difference between turning a perfect entry into a massive win and watching that same setup destroy your confidence has nothing to do with finding better indicators or more complex chart patterns. It's about something far more fundamental, yet infinitely more challenging to master. The markets reward those who understand that precision timing isn't about speed. It's about strategic patience combined with decisive action at exactly the right moment. Has this ever happened to you? You spot a setup that looks absolutely perfect. The charts align, the volume is building, momentum is clearly shifting. That voice inside your head starts screaming urgency. This is it! Get in now before it runs without you. So you pull the trigger, maybe even adding extra size because you're so confident. Then, almost immediately, the position turns against you. What seemed like the beginning of a major move was actually just noise, and you've just handed the market your hard-earned capital because you confused urgency with opportunity. But before we begin, please hit the like button and let me know where in the world you're watching from today. It's always fascinating seeing who's joining us from around the world, and if you haven't already, make sure to hit that subscribe button and turn on the notification bell so you don't miss any of our future videos. The harsh reality is that Impatience has emptied more trading accounts than any market crash, any black swan event, any unexpected news release. We live in a world that celebrates speed, that worships instant gratification, that makes us feel like we're missing out if we're not constantly taking action. But in trading, this mentality is poison. The market doesn't care about your need to feel productive or your fear of missing the next big move. What you're about to discover might surprise you. The most successful traders aren't the ones making the most trades. They're the ones who've mastered the art of waiting for moments when timing, confirmation, and probability all converge into a single, unmistakable signal. Stay with me until the end of this video, because what I'm going to share with you completely transformed how I approach entries. This isn't theory. This is the practical framework that separates traders who occasionally get lucky from those who consistently turn perfect setups into positions that deliver massive, life-changing returns. The question isn't whether you can identify good opportunities. The question is, can you master the discipline to wait for the perfect timing that transforms those opportunities into actual profits? Think about how a master hunter operates in the wild. They don't sprint through the forest making noise, desperately hoping to stumble upon their prey. That approach would be exhausting and utterly ineffective. Instead, they study the terrain, identify the paths their target naturally travels, position themselves strategically in the right location, and then they do something that separates them from amateurs. They wait. They wait with absolute stillness, with complete focus, with unwavering patience, until the perfect moment presents itself. This is exactly the transformation that needs to happen in your trading mindset if you want to turn perfect entries into massive wins. The hidden truth that most traders discover too late in their journey is that frantic activity and constant market participation aren't signs of dedication. They're symptoms of uncertainty. Behind the scenes of every blown trading account is this same pattern. Excessive movement, chasing every setup that remotely looks promising, and an inability to sit still when the market isn't offering high probability opportunities. The impact of this frantic chasing approach compounds over time, not just financially but psychologically. You become conditioned to always be doing something, to always have positions on, to always be engaged, even when the smart money is waiting patiently on the sidelines. If you're ready to master precision timing, hit that subscribe button. I'm constantly sharing strategies that can transform your approach to the markets. Here's where the real revelation happens, and it might challenge everything you've been taught about trading success. The most profitable traders I've studied don't take more trades than average traders. They take significantly fewer. This isn't because they're lazy or uncommitted. It's because they've discovered that quality destroys quantity every single time. When you pass on 10 mediocre setups and wait for that one exceptional opportunity where timing, momentum, and market structure all align perfectly, your results transform dramatically. You're not spreading your capital thin across multiple questionable positions. You're concentrating your firepower on the trades that genuinely matter, the ones where probability is stacked heavily in your favor. The confidence to sit in cash while everyone around you is frantically buying and selling requires a complete mindset shift. It requires you to measure success not by how busy you are, but by how selective you become. This journey from constant participant to strategic operator changes your entire relationship with the market. You stop feeling the compulsive need to always have skin in the game. You develop the inner security to watch potential setups unfold without you, knowing that passing on a questionable entry is actually a form of profit. You're protecting capital that would have been at risk in a low-probability trade. Now, I want to go even deeper into this concept because what happens next is where most traders either break through to consistent profitability or remain stuck in the cycle of mediocre results. When you genuinely embrace trading less, something profound shifts in how you perceive opportunities. The anxiety around missing moves begins to dissolve because you realize the market isn't going anywhere. There will always be another high-probability setup forming. The question becomes, are you preserving your mental clarity and capital to recognize it when it arrives? Write in the comments, quality over quantity, if this approach resonates with you and you're ready to transform how you select your entries. What most people misunderstand about patience in trading is that it's not passive. It's actually one of the most active positions you can take. While everyone else is scrambling to react to every price movement, frantically entering and exiting positions based on emotion and impulse, you're doing something far more powerful. You're observing, you're gathering intelligence, you're watching how the market behaves when pressure builds, how certain stocks respond to key levels, how institutional money moves beneath the surface of obvious price action. This transformation from reactive participant to strategic observer gives you an edge that no indicator or chart pattern could ever provide. Behind the scenes of every massive winning trade is a period of careful observation that preceded the entry. The revelation here is profound. When you're not constantly juggling multiple positions, when you're not mentally exhausted from monitoring 5 or 10 trades simultaneously, your mind gains the clarity to see what's actually happening. You start noticing the subtle signatures that announce major moves before they become obvious to everyone else. You observe how volume quietly accumulates days before a breakout occurs. You recognize how price tests and retests key levels, building the foundation for an explosive move higher. These details, these whispered signals from the market, are completely invisible when you're distracted by the emotional roller coaster of frequent trading. Think about the impact this has on your decision-making process. When you're trading constantly, you're operating in a state of continuous partial attention. Your focus is fragmented across multiple positions, multiple timeframes, multiple narratives. But when you reduce your trading frequency dramatically, something extraordinary happens. You can dedicate your full analytical capacity to studying individual setups with surgical precision. This is where the journey from struggling trader to consistently profitable operator really accelerates. You begin recognizing patterns that most participants never see because they're too busy chasing the next trade. You notice how certain stocks consistently lead their sector during market rallies, signaling where institutional money is positioning. You observe how price behaves differently around the same level on different tests, sometimes showing strength, sometimes weakness. And these behavioral clues become your roadmap for timing entries with extraordinary precision. The hidden truth is that the best trades, the ones that deliver those massive wins we're all pursuing, aren't found through constant searching. They reveal themselves to those who have the discipline to watch and wait. When you create space in your trading approach, when you give yourself permission to not always be in the market, you develop a completely different relationship with opportunity. You stop trying to force trades from market conditions that aren't optimal, and you start recognizing the setups where everything aligns so perfectly that the entry feels almost effortless. What happens next in this transformation is perhaps the most critical shift of all, because it directly determines whether you'll consistently turn perfect entries into positions that actually deliver substantial profits. I see the signals in the comments if you've started noticing these subtle patterns that precede major moves. Here's something that fundamentally changed my entire approach. And to the markets. And it's going to sound completely counterintuitive at first. Your primary job as a trader isn't actually to make money. Let that sink in for a moment. Your real job, the one that determines whether you'll still be trading profitably 5 years from now, is protecting the capital you already have. This mindset shift represents the dividing line between traders who survive long-term and those who eventually blow up their accounts despite having solid technical knowledge. The impact of this perspective becomes clear when you realize that every single trade you decide not to take, every setup that looks tempting but doesn't quite meet your strict timing criteria, is actually a defensive victory. You're preserving your buying power, keeping your ammunition dry for when that truly exceptional opportunity presents itself. Behind the scenes of every successful trading career is this uncomfortable truth. The trades you don't take often matter more than the ones you do. When you embrace trading less as an active form of protection rather than missed opportunity, everything changes. Think about how the best traders approach risk. Before they even consider potential profits, they're asking themselves a completely different question. How much could I lose if this setup doesn't work? This isn't pessimism, it's professional discipline. They understand that protecting their capital base is what keeps them in the game long enough to capitalize on those perfect timing situations when they arise. The journey from amateur to professional thinking happens precisely at this point, when you stop measuring success by how much you can make on any single trade and start measuring it by how well you're managing what you could lose. Now here's where most traders reveal their true level of conviction without even realizing it. When you find yourself constantly entering and exiting positions, taking trade after trade with minimal pause between them, you're not demonstrating ambition or work ethic. What you're actually experiencing is uncertainty. This revelation was difficult for me to accept initially because I wanted to believe that my constant activity meant I was dedicated and hard-working. But the hidden truth is that traders who lack genuine conviction in their strategy compensate by increasing their trading frequency, hoping that somehow through sheer volume, probability will work in their favor. Precision timing demands something entirely different. It requires the discipline to wait until multiple elements converge simultaneously. You need price action that confirms your thesis, volume patterns that support the anticipated move, and broader market conditions that create the perfect environment for your setup to unfold exactly as planned. When these factors align, that's when conviction becomes possible. That's when you can enter a position with absolute certainty that you're playing with the odds stacked heavily in your favor, rather than against you. The transformation that happens when you develop this level of selectivity is remarkable, and it extends far beyond just your trading results into how you experience the entire process of being in the markets. Comment: conviction over activity if you're committed to building genuine conviction in your setups rather than compensating with excessive trading frequency. What happens after all that patient observation and strategic waiting is where the magic really occurs. And it's the part that most traders completely misunderstand. When you've done the difficult work of waiting, when you've watched and analyzed and prepared, and finally all the conditions align perfectly in front of you, that's precisely when you need to execute with absolute conviction. No hesitation, no second guessing, no tentative half positions while you wait to see what happens. This decisive moment demands your complete commitment, and here's why. You've earned that conviction through your patience and thorough analysis. The hidden truth behind this approach is that decisive action isn't recklessness when it's preceded by strategic patience. It's the natural culmination of proper preparation. Think about the impact this has on your psychology in the moment. When you've waited days or even weeks for the perfect setup, when you've watched the pattern develop exactly as your analysis predicted, when volume confirms the move and market conditions support your thesis, there's no room for doubt. You act with the kind of unwavering confidence that separates exceptional traders from those who remain perpetually mediocre. Subscribe if this resonates with you and you want to learn how to trade with greater selectivity and conviction. This content is for traders ready to focus on what truly works. Behind the scenes of every massive winning trade is this pivotal moment where preparation meets opportunity and the trader executes without flinching. This is where most people fail, even when they've done everything else correctly. They've been patient, they've analyzed properly, they've identified the perfect timing, but when the moment arrives, they enter with half conviction. They take a smaller position than their risk parameters allow because some nagging doubt creeps in. Or worse, they hesitate just long enough to miss the optimal entry point entirely. Now here's where something truly transformative happens in your trading journey. When you dramatically reduce your trading frequency. I'm talking about cutting your volume by 70 or 80%. Every single trade you take begins to carry genuine weight. You feel the importance of each decision in a completely different way. This isn't about stress or anxiety. It's about meaningful engagement with your craft. When you're only taking 1 or 2 high-conviction trades per week instead of 10 mediocre ones, the level of care you bring to each position changes fundamentally. You start planning each trade with meticulous attention to detail. You define your risk parameters with precision before you ever click the buy button. You map out multiple exit scenarios based on different ways the trade could unfold. You monitor the position with complete focus rather than distracted half attention while managing 5 other trades simultaneously. This depth of engagement is absolutely impossible when you're juggling dozens of positions or making multiple trades every single day. The clarity that emerges from this focused approach becomes your true edge in the market. You're not spreading your mental energy across countless decisions. You're channeling everything into making each entry count, into timing each position with surgical precision. The transformation in your results becomes undeniable because you're operating from a place of genuine conviction rather than hopeful speculation. What emerges from this shift is something even more valuable than improved profitability, though that certainly follows. You develop a completely different relationship with your own decision-making process. Write precision over volume in the comments if you're ready to make each trade genuinely count instead of taking quantity over quality. There's a hidden cost to every trade you take that never shows up on your profit and loss statement, and most traders remain completely unaware of it until they're burned out and struggling. That cost is mental energy. Every position you enter, every decision you make about when to exit, every emotional response to price fluctuations, all of it drains a portion of your finite cognitive resources. This mental fatigue accumulates silently in the background of your trading journey, and the impact becomes devastatingly clear in the quality of your decisions. When you're constantly juggling multiple positions, your decision-making capacity inevitably deteriorates. You start making subtle mistakes that compound over time. You miss stop-loss orders because you're distracted managing 3 other positions. You enter trades impulsively at suboptimal prices because you're too mentally exhausted to wait for proper confirmation. You exit winning positions prematurely because you lack the mental clarity to evaluate whether the move has genuinely run its course. These aren't random errors. They're the predictable symptoms of operating on depleted cognitive reserves. Behind the scenes of every blown trading account is this pattern of mental exhaustion leading to increasingly poor decisions. The revelation here transforms everything once you truly grasp it. By dramatically reducing your trading frequency, you maintain mental freshness that becomes an enormous competitive advantage. While everyone else is operating in a fog of decision fatigue, you're alert, focused, and able to notice the subtle timing signals that exhausted traders miss entirely. You observe early signs of institutional accumulation. You recognize the shift in character at key price levels. You spot changes in relative strength that precede major moves. This mental clarity allows you to operate in a completely different state than the majority of market participants who are grinding themselves down through constant activity. Now here's where something truly fascinating happens, and it's going to sound paradoxical until you experience it yourself. The less you trade, the more money you tend to make. This isn't just some feel-good philosophy, it's a mathematical reality that reveals itself once you understand market dynamics at a deeper level. The paradox exists because when you wait exclusively for the cleanest setups, your trades naturally align with the market's own rhythm rather than fighting against it. You're not trying to impose your will on price action or predict where reversals might occur. Instead, you're entering positions where trends are already clearly established, where momentum is obviously building, where the path of least resistance is abundantly clear. Your timing decisions feel effortless because they occur at points where the market is already moving powerfully in your anticipated direction. Think about the transformation this creates in your entire trading experience. You're no longer battling the market, trying to force it to do what you want. You've become synchronized with its natural flow. This harmony between your actions and the market's intentions creates something remarkable, a state where trading stops feeling like constant struggle and starts feeling almost choreographed. The journey to this level of synchronization requires you to completely reimagine what successful trading looks like. And that shift begins with understanding something most traders never grasp about opportunity itself. Comment flow, not force. If you've experienced that magical alignment when your timing perfectly matches the market's natural direction, when you dramatically reduce your trading frequency, something remarkable happens to your perception of the markets. That obsessive focus on minute-by-minute price action, that constant monitoring of every tick and candle, begins to fade away. In its place emerges a much more powerful perspective, the ability to see markets in terms of waves, cycles, and probabilities rather than random chaos. This elevated viewpoint represents a fundamental transformation in how you understand price movement. The revelation here is profound. Perfect timing opportunities aren't fleeting moments that disappear if you blink. They're recurring patterns that present themselves regularly, consistently, predictably to those who've developed the patience to recognize them. When you're trapped in the minutiae of constant trading, These larger patterns remain invisible to you. It's like trying to understand the shape of an entire mountain range while you're standing on a single rock. Step back, reduce your activity, and suddenly the landscape reveals itself with striking clarity. Behind the scenes of every consistently profitable trading career is this understanding that opportunities aren't scarce. They're abundant for those who know how to identify them. The anxiety about missing moves dissolves completely when you internalize this truth. The market will always offer another high-probability setup next week, next month, throughout your entire trading career. But here's what won't always be there: your capital. Once that's depleted through forced, suboptimal entries, your participation in the game ends permanently. This brings us to perhaps the most uncomfortable yet liberating truth in all of trading. Missing a move costs you virtually nothing. The temporary discomfort of watching a stock run without you, that sting of seeing an opportunity unfold from the sidelines, it fades within hours or days. But forcing yourself into a position that doesn't meet your strict timing criteria, entering just because you feel like you should be doing something, that damage can alter your entire trading trajectory. A single poorly timed entry can wipe out weeks or months of careful gains. Multiple forced trades can destroy your confidence and your account simultaneously. Every master trader throughout history has developed this crucial skill: the art of doing nothing. The ability to sit in cash for extended periods without feeling that compulsive itch to act. Their genuine edge isn't found in some magical ability to predict the next move before anyone else sees it. It's in recognizing the precise moment when deploying capital makes sense based on probability, confirmation, and optimal timing. The discipline to remain inactive during uncertain conditions requires more genuine confidence than the courage to enter positions, and that's exactly why most traders never develop it. The impact of this mindset shift extends far beyond just your results. It changes your entire relationship with opportunity itself. You stop viewing the market as something you need to constantly extract from and start seeing it as an environment that periodically offers you favorable conditions. When those conditions appear, you act decisively. When they don't, you wait without anxiety or frustration. What emerges from this transformation is a completely different approach to reading market behavior, one that focuses on what price is actually doing rather than what you hope it might do. Type "Patience protects capital" in the comments if you've realized that sitting out mediocre setups is actually one of your most profitable decisions. This shift from trying to predict price movement to simply observing what's actually happening right in front of you represents the final piece of the puzzle. Stop asking yourself where you think a stock is going and start asking what it's telling you about its character right now. Watch how it behaves after breaking through resistance. Does it hold those gains with confidence or immediately slip back down? Notice its reaction during broader market weakness. Does it demonstrate relative strength or crumble along with everything else? These behavioral signals reveal infinitely more about future movement than any prediction ever could. Strong stocks act strong, weak stocks act weak. That simple observation contains more trading wisdom than most complex strategies you'll ever encounter. When you combine this behavioral focus with everything we've discussed, the strategic patience, the selective timing, the mental clarity from trading less, you create a framework that genuinely transforms your results. You're no longer gambling on what might happen. You're responding to what is happening, and that distinction makes all the difference. If these ideas resonated with you, if this approach to timing and precision makes sense for where you are in your trading journey, I genuinely appreciate you subscribing to the channel. I'm constantly exploring these concepts deeper, sharing practical strategies that can shift how you see the markets entirely. And if you made it all the way through to this point, drop "Behavior reveals everything" in the comments. It helps me understand which topics are connecting most with you. A simple like on this video means more than you might think. It tells me this content is valuable to you, and it helps other traders who need to hear this message find it as well. There's a video right here that dives into exactly how to protect your capital even when your timing isn't perfect. It pairs perfectly with what we covered today. Click and continue with me over there, because what you'll discover might be the missing piece you've been looking for.